Hi guys, welcome back to my YouTube channel. So today I want to teach you how you'll be able to make at least 1000 Ghana cedis every single month right here in Ghana or anywhere you are watching this video from. So this is going to be an interesting one. So I've divided it into two sections. The first section will teach you most of the things that you need to understand about the trading, including the leverage and the rest, how to deposit money and all of that. And then the other section is the advanced one. But each part is very essential because of the strategy that I'll be teaching in the two of them. You need to watch the part one so that you'll be able to understand part two as well. So let's get in. The video might be boring, but it's not useless. Now let's get to this place. Now imagine I have US dollar inside my account. How did I get it? I got it when I purchased USDT from Binance. So I bought crypto online, which is USDT. But then for you to know, I have all the videos inside the video description. So any one of the videos that will help you to buy the USDT or even sell it or add your payment method, all of it is inside the video description. Anything that will help you to understand this video are all there. So we start by, I'll be mentioning the videos that I have inside the video description. So the first one is how you can buy your crypto coin, just like I just did right now. So you need to buy your crypto coin for you to start doing what I'll be teaching inside this video. So now after buying it, I would like you to go to this place where we have the market. You move to the top left corner where we have this Binance logo, and then you will switch it to Binance Pro. With the Binance Pro, this is where we have everything, trading and all of that. They are all available here. It's just like in-depth knowledge or more insight into the application where trading take place. So that's what we do. So right here we have our USDT. The next thing that I must do is to go to this place where I have the futures trading. This is what we will be working with. So I will explain some of the applications here, or some of the features, so that you get to understand how useful or how helpful they will be in what I'm about to show you. So with this, I am guaranteed that you are going to be printing a lot of money, especially when you take my advice very serious. But you must first know that this is not an advanced or a pro way of learning, because I just want to put you on so that you can make some money for yourself. But if you need more detailed knowledge in other things that I know inside crypto, maybe you can just decide to DM me, and then we talk about how you can go deep into it. But with these two, you can still be able to make good amount of money. Now let's get into it. Now futures. What is futures? Futures is more like you borrowing money from the broker, and in this case Binance is your broker. So maybe you have $60, or let's say $10 inside your account, and that money is too small, and when you trade with it you are not going to make more money. So you will borrow money from the market, and borrowing that money, we call it leverage. So leverage will multiply with the money that you have to make it more for you to trade with it. Well, I'll come back to that very, very soon. Now when you come into your application just like this is your futures wallet. If you are just signing up, they might tell you to open or register for a futures account. You still click on this futures place. When it comes, they might ask you few questions. It's just normal questions. When you pass it, they will open it just like this one. Now what must you do? Go to this place where we have the available. Go to this place where we have the available, where we have the balance, and once you click on that, you see, once we click on it, we have the money inside our spot wallet. You can see the spot at the top here. Anytime you buy crypto, it will go into your spot wallet, and we are dealing with futures, or we have our futures wallet right here. So we need to transfer the money from our spot into our futures. So all I need to do is just make sure this place is at USDT. You can see it should be at USDT because we have USDT. I hope you understand. Now the next thing is to just click on any amount that you want to deposit, or you want to transfer from your spot, any amount of money you want to use on this coin. That's what we are going to do. So I have $54, so I'll use 50, and then I'll click on confirm transfer. You can see now we have deposited our money. Okay, now that we have deposited the money, what is the next thing to do? The next thing is to go to this place where we have the cross margin, and then we have the isolated margin. I'll explain these things, and you need to pay attention and understand. Now we have cross margin. With the cross margin, you are setting the market in such a way that anytime you are inside a trade, you have your trade, but then money will be taken from your account. Maybe when the trade is going against you, the rest of the money inside your account will be taken as collateral for it to be paid, so that you don't blow your account or you don't go to a loss. Now let me explain this deeper. When you are inside a trade, just like I have this $50. If I want to enter any trade, I might use $5 per trade. So any single trade, I'll be using $5 even though I have $50. I'm doing that because I will be thinking I need to prepare myself that maybe the trade might go against me. So what if it goes against me? Am I not losing all the money if I use the whole $50? Yes, there is probability of you losing it all if you use the $50. So I want to use it in bits, even though I have confidence that I'm going to win, or I am hopeful to win. We cannot be sure all the time. So if it goes against me and then I use only $5, I will set a price that if I lose that amount, that is it. I hope you understand. So when I use $5 per trade, that doesn't mean I am risking $5. $5 is only the amount that I am investing, I am putting on that coin. But the money that I am risking is the stop loss. The stop loss means this is the amount of money that I want to lose if the trade goes against me. I'll also come to that part and show you what I mean by that. But then I am still explaining this cross margin. Now, imagine I use that $5 and then the trade is going against me. It is allowing me to maybe set my stop loss or how much I want to risk up to $10. So I can say if I lose up to $10, then the market should close for me automatically. So I'll set the numbers down, and then once the time reaches, it is going to close it for me. So this cross margin, instead of me losing the same $5, instead of me using this $5 to enter the trade, cross margin will help me to even increase my stop loss or my risk up to $10. Now let us talk about this isolated margin. When you talk about this isolated margin, you are telling the market that since I have used $5 to enter the market, I should just lose that $5. I hope you understand. Once I am able to enter the trade with just $5, if the trade is going against me, let me just lose the $5 and the market will close for me. That is the difference between the cross margin and then the isolated margin. So cross margin is allowing me to increase my risk. It can even go up to $20 or $30 or any amount. I hope you understand. That means money will be taken from my account. More money will be taken from my account if the trade is not going against me. People do that sometimes so that maybe sometimes the market might be fluctuating, or the market might go against me for some time, and then I need to increase my risk so that even if it is going against me, I know that for sure a period will come that it will start going in my favor. But I do not want to lose the trade. If you are using isolated at that time, if the trade is going against you for some time, you might lose the trade, and then it will start coming back to your favor, and then you regret that if you had known, then you would have used the cross margin. So I love using cross margin so that I can increase my stop loss or my risk, so that if it is going against me, I will allow the room for it to roam about and start going in my favor in the long run, because I am a day trader. Okay, so that's what we are talking about. So let us talk about, let me just bring it back to the cross margin. Now the next thing that I need to talk about is the leverage. This is the next thing right here, the leverage. So leverage is more like you borrowing money, whereby you'll be able to increase how much you lose or how much you gain if the trade either goes in your favor or goes against you. With leverage, it's more like multiplying how much you are putting on a trade. So just like I use $5 or I try to use $5 on a single trade, I'll multiply that $5 by whichever leverage that I'm using. So if I'm using 25x leverage, that means that $5 times 25. So I hope you know what that is already. So I think that is 125 dollars. So $125 is how much I am using on this trade. So that's very cool. That is increasing how much you lose if the trade goes against you, and how much you make when the trade goes against you. With people who understand this thing already, they use leverage in their favor to be able to increase or marginalize how much they make if the trade goes in their favor, and also they decrease it or they lose less if the trade goes against them. That is just as I said, people who understand it fully well. So those are some of the things that we'll be using inside what I am about to show you. Now the next thing is this place where we have the single asset mode and also the multi-asset mode. With the single asset mode, it's more like you using only US dollar, which is the USDT that we have over here. So you see, when I click on the balance back again, you see that when you click on this place where we have the coin, we have USDT right here. This is the option for you to select if you want to add other crypto coins that you have. Maybe you have BTC in your account, which is in your spot wallet, you have Solana, you have Ethereum and the rest. You can just add any one of them that you want to add onto your futures wallet right here. But if you are using cross margin, then you can use this one. It only works for cross margin. Okay, so if you are using cross margin, you are not allowed to use the multi asset mode, but with the single asset mode, this is only for USDT, so you are not allowed to add all of the different coins that I just mentioned right now, like the BTC, the Solana and the rest. If you are using isolated margin, you are not supposed to use it. Now what does it do? With the isolated margin, when you add all of those ones, let me just talk about this one first. So let me talk about the second one before I tell you the differences. Let's talk about the multi-asset mode. When you use the multi-asset mode, you are allowed to add other coins that you have inside your account, your spot wallet. So maybe you have the BTC, Solana and all of the other coins that I just mentioned right now. You can add them. So when you add them, anytime the trade is going against you, the system will automatically either use BTC or Ethereum as collateral. So when I mention collateral, I am talking about if the trade is going against you, the rest of the money inside your account that will be used to pay as your stop loss, or the money you are risking is your collateral, and that happens in cross margin. That is why it is good that you use the isolated margin. When you use the isolated margin, you are only dealing with USDT. That's simple like that. You are using only USDT. But when you use the isolated margin, you have opened your account. If you have other crypto wallets or crypto coins inside your wallet, they will be working here. You understand? If you use the margin, this one, the multi-asset mode right now, you are permitted to add other crypto coins that you have inside the account. In case the trade is not going well for you, it will be used as collateral. But myself, I prefer using the isolated margin, so that I only work in USDT. That is the if you have other coins like the BTC and the rest, what you simply have to do is to convert them to USDT before you be able to use them under the isolated margin. I hope you understand. If you are using cross margin and you are using isolated margin, the two of them, just like I do it all the time, any time that I have, or in case I have BTC or other coins inside my wallet and I want to bring them here, what I first do is to convert them to USDT, because under the isolated margin only USDT is allowed. And the vice versa is that the multi-asset mode, you can add other crypto coins without converting them, and they'll be working very well here. They'll be used as your stop loss if the trade is going against you, or your collateral if the trade is going against you. That is the difference between the two of them. Now let us talk about buy and sell. So buy, we also call it long. You can see it over here. So it just means that you are predicting the market to go up. You are buying. Once you buy, you have predicted, or you are predicting that the market will go up, and if it goes up, then you will be in profit. But if it goes down, it means your prediction is failing, and then you are losing money. I hope you understand. So it will be going down until your stop loss that you have set, and then I explain your stop loss is how much you are risking on a trade, how much you want to lose in case the trade goes against you. I hope you understand. So we have those ones, and then we have the sell. With the sell, it is talking about how much you are willing to I mean, this sell here, sorry, is talking about you predicting that the market goes down. That's the work of the sell. So it's different from spot trading. Spot trading, you either buy the coin and you hold it for some time, and if you make profit, then you sell it and you make you collect your money, or you close the trade, and then that is that. But in futures, you either predict for the market to go up, or you predict for the market to go down. So if you want it to go up, it means you are going to buy or go long. If you want to sell it, or you want it to go down, you sell it, or we call it short, where the market goes down, and if it goes down, you make your money, and if it goes up, that means you are losing money. Yes, that is very true. Now let us move to this place where we have the market order, and then we have the limit order. Now I'll only explain the most, or the favorite ones that I use all the time, and that is the limit order and then the market order. But I use the market order more. So with the limit order, just like we have it over here, limit order, you are telling the market that this is the point at which I want to enter the market. Let me just show you this thing right here. So we have this one over here. You can see this coin, and you see the market is dropping. This is the 4 hours time over here. Now I can predict or say that the system will go here. You see the market will drop down to this level. Let me just show you it again. Yes, the market is dropping, the red is coming down, so I can predict that the market is going to go down here, and once it comes down here, then I will predict again that the market, after hitting that point, it will start going up. You see it is dropping, so once it hits this point below the black one, it will start going up. So I will set limit order that once the market touches down here, I need to buy. Maybe I might not be available, but the system should automatically buy for me, so that when it start going up again after dropping to that point, when it start going up, I am already in a trade. Even though I'm not available to enter it at that moment, the system automatically do it for me as I have done it. I don't know if you understand, sir. So that's true. So all I need to do is just set this one over here. Then I know the price. So we have 0.11837. That's the price of the coin when it reaches that point. So I'll just go into my market and then I enter. You see, we have the limit order, and under it we have the price. So I'll just go here. We have the 0.11 something something, I can't remember again. So I'll just put it here. Once I do that and then I enter the market, it means that the trade will not execute. It will not be working yet. It will be there not working until the price drops to that point. Then the system will buy for me. So I'll just click buy, set my price and click buy, and then once it touches down there, it will buy for me. And once it starts going up, then the system, the profit will be coming. But if it doesn't stop at that point that I want it to enter the market, it will still enter the market. But if it doesn't stop there and start going up and it decides to pass it and continue going down, that means I'll be losing. I don't know if you understand. That is the explanation that I have for limit order. We have the market order. Market order, just this one. It means you are entering the trade at this exact moment, at this actual time here, the current time, the active moment. You enter the trade now, it will enter at this place. This is the price of the this coin, ESP. This is the coin that we have. So 13041. You enter it instantly on the current price. That is the limit order. With that, it means you are the one doing everything manually. Now let us talk about the amount. The amount here, you are entering the quantity of the coin that you are entering. But then, not to make this confuse you, the best thing to do is to use this place. You see there is an arrow down, this small one here. You can see this one here. This is what I use to set my price, or the amount that I want to enter. The amount here is more of quantity. You see, the amount here is more of quantity. So what I do is to use this one. Just use this one, go according to what I am saying, and then you'll be able to do that. Do not mind the numbers that are coming inside the amount. Do not mind it. Don't even look at it. All you need to look at is down here. Let me just show you. All you need to look at is down here at this place where we have the cost. You see, some platforms you have margin, and some platforms you have cost. At the bottom here, you can see we have 17.6 something, 17.6791. You see, it keeps changing. Okay, so this is the cost. That is how much I want to lose. That is how much I want to put on this trade if I want to enter it. So if I want to trade with $5, I want to use the $5 to trade. Just like I said, I'll be scrolling this thing backward and until the price at the cost gets to $5. Yes, so I'll do that. You see, I'll do that. You see, it's at 5 point something, so it will keep changing. Now that's it. That is how you set your price. And if I have predicted that the market is going to go up and I want to buy it, I only have to click on buy or long, and then the market enters for me. You see, and also if I want to sell, I'll just go to the sell, set the price the same way. That means I am predicting that the market goes down, and then I'll just enter the market, and then it will continue to go down and I'll be making money. That's simply how this thing works. And at the bottom here, I'll also come back to this place in my next video to explain to you how this one's all of it, how it works, the open orders, the position, and all of it. And I'll also teach you how you can analyze the market and know which coin is going to buy or which coin is going to sell. So those are the things that I'll be teaching in my next video. So do not miss it. I'll just be back right now.